Hello everyone, welcome to my channel HD ORION. We are studying accountancy for class 12th from T.S. Grewal's textbook 2023 edition, Accounting for Partnership Forms. Chapter 1, Accounting for Partnership Forms Fundamentals. And in this video we will study calculation of interest on partners' capitals. So let us see some questions from the textbook. Question number 28. A and B are partners in the ratio of 3:2. The firm maintains fluctuating capital accounts and the balance of the same on 31st March 2020 amounted to rupees 1,60,000 and rupees 1,40,000 for A and B respectively. Here the closing balances of capital accounts on 31st of March 2020 is given. It means it is the closing balance, and to calculate interest on capital we have to calculate opening capital balances. Their drawings during the year were rupees 30,000 each. Now these drawings are out of profit, but because capital accounts are maintained in fluctuating method, and therefore we have to take this information to calculate opening capital balances. As per partnership deed, interest on capital at the rate of 10% per annum on opening capitals had been provided to them. Calculate opening capitals of partners given that their profits was rupees 90,000. Show your workings clearly. So let us see the solution for this. So solution 28 we will see. We will calculate opening capital balances by this table. In this, all the amounts related to A will be written, here B will be written, and here is the total. Fine, because we need this total column also to calculate opening capital balances. Now, closing capital balances are given to us. That is on 31st of March 2020. A's balance is rupees 1,60,000 and B's balance is rupees 1,40,000. These are closing balances after drawings. So in order to calculate opening capital balances, we have to add back drawings. Drawings as stated in the question is rupees 30,000 each. So 30,000, 30,000. Now when you add this, you get rupees 1,90,000. and rupees 1,70,000. Fine. Let me add this. When you add this, it is rupees 3,60,000. Now, what else has been done to the partners or given to the partner is interest on capital, and also, but in arriving this closing balance, profit has also been given to the partner and interest on capital has also been provided. So one by one we will have to eliminate it because it has already been added here or provided to the partners, and therefore we will deduct it now. So less profit and also less interest on capital. Then the remaining figure will be opening capital balance. That will be on 1st of April 2019. Fine. So now the question says that given profit was rupees 90,000. So this distributable profit which is given to the partners in their profit sharing ratio 3:2 and interest on capital, they together are rupees 90,000. So when we subtract this 90,000 from rupees 3,60,000, the amount we get is rupees 2,70,000. Fine. Now this 2,70,000 is the total opening capital of A and B. Now when the total capital is known to us, we can also know that interest on capital which is at the rate of 10% per annum. Fine. So on opening capital, 10% is interest on capital, so 2,70,000's 10% is rupees 27,000. Fine. It is rupees 27,000. So out of 90,000, 27,000 is given as interest on capital, and therefore distributable profit has to be how much? It has to be 90,000 minus 27,000, which is equal to rupees 63,000. I hope you are getting this. You see here, after adding back interest, the total is rupees 3,60,000, and in this 3,60,000, the net profit has also been added here. Now if we subtract net profit 90,000, which is a combination of interest on capital and divisible profit, we get the balance, which is opening capital balance. And interest on capital has to be 10% of opening capital balance, which is 27,000. So out of 90,000, 27,000 is interest on capital. So divisible profit to the partners has to be 90,000 minus 27,000, which is 63,000, which is given to the partners in their profit sharing ratio 3:2. So when you break 63,000 in the ratio 3:2, means 37,800. Fine. And the other partner has received 25,200. So when we subtract this from here, we get rupees 1,52,200, and here rupees 1,44,800. Now this is what? This is opening capital plus interest on capital, which is equal to 100% of opening capital plus 10% of opening capital. It means it is 110% of opening capital. Fine. So we can calculate opening capital here because it is 110. So for A, how much it will be? 1,52,200 multiplied by, because we are calculating opening capital, multiplied by 100 divided by how much it is? 110. So we will divide it by 10. And what we will get here? 1,38,364. Okay. Similarly for B, we can calculate. B's is how much? 1,44,800 multiplied by 100 divided by 110. The amount we will get is rupees 1,31,636. These are the opening capital balances, and we know that 10% of it is interest on capital. So when you take 10% of this amount, it means last digit you can cancel and the remaining is 10% of opening, that is 13,836, and here it is 13,164. So in this way we can say, we can calculate what the opening capitals are and what interest on capital is. Now let us see question number 29. Following is the extract of balance sheet of Neelkant and Mahadev as on 31st March 2023. Balance sheet is given. On the liability side, we have got Neelkant's capital rupees 10 lakh, Mahadev's capital rupees 10 lakh, Neelkant's current account rupees 1 lakh, Mahadev's current account rupees 1 lakh. Profit and loss account for the current year, that is 22-23, is rupees 8 lakh. To the asset side, we are having sundry assets rupees 30 lakh. Now grand total is also 30 lakh. During the year, Mahadev's drawing were rupees 30,000. Profit during the year ended 31st March 2023 is rupees 10 lakh. Now see, out of rupees 10 lakh, 8 lakh is here in the balance sheet separately shown. Calculate interest on capital at the rate of 5% per annum for the year ending 31st March 2023. Now, it is a very simple question. You see the balance sheet and you will find that current accounts are separately maintained. It means partners' capital account are fixed. Fine. It means nothing has been added to the partner's capital account, nor anything has been subtracted. Fine. Here drawings are given. These drawings are out of profit, not out of capital. And the profit is also given 10 lakh, which will go to current account, not capital account. So Interest at the rate of 5% per annum means on these balances 10 lakh rupees to both the partners 5% interest is to be allowed. That is very simple. Just by observing the question you can immediately deduce the answer. You can see here interest on capital is 50,000 each. Why? 10 lakhs 5% is 50,000. Now let us see question number 30. From the following balance sheet of long and short, calculate interest on capital at the rate of 8% per annum for the year ended 31st March 2023. To the liabilities side, capitals of long and short is given, which is 1,20,000 and rupees 1,40,000 respectively. General reserve is of rupees 1 lakh. To the asset side, fixed asset is rupees 3 lakh. Other assets are rupees 60,000. Grand total rupees 3,60,000. During the year, long withdrew rupees 40,000 and short withdrew rupees 50,000. Profit for the year was rupees 1,50,000, out of which 1 lakh was transferred to general reserve. Now, in this question, the capital accounts are fluctuating. How do we come to know? Because there is no current account balance given in the question as it was given in the previous question number 29. It means these capital accounts are fluctuating and every appropriation of profit is given in the capital account itself. Fine. The firm has earned a net profit of rupees 1,50,000, out of which 1 lakh is transferred to general reserve. So here is general reserve, which is showing 1 lakh rupees. So out of rupees 1,50,000, 1 lakh is general reserve. So remaining 50,000 is given to the partners in their partners capital account. Fine. So we will have to calculate opening capital balances of both the partners because these are the closing capital balances, and then we have to calculate interest on capital at the rate of 8% per annum. So let us see the solution. Solution 30. First we will write closing capitals. That is on the last date of the accounting year, 31st March 2023. As given in the balance sheet, it is 1,20,000 for the first partner long and 1,40,000 for the second partner short. Fine. In this we have to add back drawings. Drawings are the amount which is withdrawn from the business by the partners. So it has to be subtracted from opening capital balance. But because we are starting from closing capital balance, reverse will be the logic. We will add back drawings to calculate opening capital balances. It is 40,000 for the first partner and for short it is 50,000. Okay, then we will subtract profit, divisible profit or distributable profit. Fine. And this distributable profit is rupees 50,000. How 50,000? Out of net profit 1,50,000, general reserve of 1 lakh is prepared. So final divisible profit is how much? 50,000. So this 50,000 is given to the partners in their profit sharing ratio, and there is no profit sharing ratio given in the question, and so it has to be 1:1. That is equal profit sharing ratio. So we will subtract 25,000 from both the partners. Now whatever we get, so when you calculate this, you get rupees 1,35,000, and here for short you get rupees 1,65,000. This is our opening capitals. That is on 1st of April 2022. Now on this opening capitals only we have to provide interest on capital. So interest on capitals on this balance rupees 1,35,000 as suggested in partnership deed 8%. It is 1 lakh 8 what's that 10,800. That is for long. Similarly for short, on his opening capital of rupees 1,65,000 at the rate of 8%, we get rupees 13,200. So this is our answer. Now let us see question number 31. Amit and Bramit started business on 1st April 2022 with capitals of rupees 15 lakh and rupees 9 lakh respectively. On 1st October 2022, they decided that their capitals should be rupees 12 lakh each. The necessary adjustments in capitals were made by introducing or withdrawing by check. Interest on capital is allowed at the rate of 8% per annum. Compute interest on capital for the year ended 31st March 2023. So let us calculate interest on capital. So solution 31, we will calculate interest on capital for Amit. For partner Amit first. Fine. From 1st April 2022 to 30th September 2022, his capital is rupees 15 lakh. Why till 30th September? Because on 1st of October, his capital is 12 lakh. Means he has withdrawn rupees 3 lakh. As per the agreement between them, they have made their capitals rupees 12 lakh on 1st October 2022. So before 1st of October, his capital is rupees 15 lakh. So as written in partnership deed, interest on capital at the rate of 8% per annum, but only for 6 months, from April to September, 6 months. So on 15 lakh, 8% is rupees 60,000. Then after he has withdrawn rupees 3 lakh, from 1st October 2022 to 31st of March 2023, his capital is rupees 12 lakh. As per the agreement between them, here also 8% per annum interest. For the remaining 6 months, we will calculate interest. It is rupees 48,000. So his interest is how much? Rupees 1,08,000. This is the total interest on capital for partner Amit. Now the next partner is Bramit. Same way, from 1st April 2022 to 30th of September 2022, his capital is rupees 9 lakh. And on this 9 lakh at the rate of 8% per annum for 6 months, because this is 6 months period, and interest for this 6 month is rupees 36,000. But from 1st October 2022 to 31st of March 2023, his capital was made rupees 12 lakh at the rate of 8% per annum for remaining 6 months. The interest on capital will be rupees 48,000. So total interest on capital for partner Bramit is 84,000. So these are the answers. Now question number 32. Molly and Bholi contribute rupees 20,000 and rupees 10,000 respectively towards capitals. They decide to allow interest on capital at the rate of 6% per annum. Their respective share of profit is 2:3, and profit for the year is rupees 1,500. Show distribution of profits when there is no agreement except for interest on capitals, and when there is an agreement that the interest on capital is a charge. So let us see how the interest on capitals will be calculated. Solution 32. Case 1. When there is no agreement except for interest on capitals. So let us calculate interest on capital for both the partners. First is Molly. Molly's capital is rupees 20,000 and rate of interest as given in the partnership deed is 6%. So for the whole year it is 1200 rupees. And for the other partner, Bholi. Bholi's capital is rupees 10,000 and same 6% and it is 600. So total interest on capital is of rupees 1800. Fine, but profit is how much? Profit is of rupees 1500. So 300 is the deficit. Means profit is less. Out of this little profit we cannot provide interest on capital. Interest on capital is not possible. Entire full interest on capital we cannot give. So what we have to do, as per the Partnership Act, it is said that interest on capital is to be restricted to the amount of profit earned during the year. So during the year it is 1500. So we cannot surpass this 1500. We cannot give 1800 as interest on capital. So what will we do? We will divide this 1800 between the partners in their interest on capital ratio. Fine. Which ratio? Interest on capital ratio, which is 1200 is to 600. It means it is 2:1. If you cancel this and reduce it, you will get 2:1. So this 1800 will be given as to Molly, not 1800, 1500, because our profit is how much? 1500. So 1500 will be given to them in their interest on capital ratio, that is 2/3, that is rupees 1000, and to Bholi 1500 1/3, that is 500. So this is the distribution of profit or appropriation of profit to the partners in the form of interest on capital in this way. So this is the answer for the first case. Now let us discuss case 2. It says when there is an agreement that the interest on capital is a charge. Now is a charge, this clause is very important here, because when such word is there in the question, it means you have to give full interest on capital to the partners irrespective of profit or loss. Fine. So as we have previously calculated, interest on capital for Molly is rupees 1200 and for Bholi is rupees 600. So total interest on capital is how much? Rupees 1800. And profit is how much? Profit earned is rupees 1500. So 300 rupees is the loss. Fine. Out of means after giving 1200 and 600 as interest on capital to the partners compulsorily, because it is a charge, so you have to give 100% interest on capital to the partners, and because of which there is a loss. So this loss will now be distributed to the partners in their profit sharing ratio, and the ratio is 2:3. Fine. The ratio is how much? Profit sharing ratio. Now please understand that this is not interest on capital ratio. In the first case we divided 1500 in interest on capital ratio, but here because it is a loss, it is not a interest on capital. So this loss is to be given to the partners in their profit sharing ratio. So out of 300, 2/5 portion will go to Molly, and to Bholi out of 300, 3 by 5 will go to Bholi, and therefore the loss is rupees 120 for the first partner and rupees 180 for the second partner. So this is how it is to be understood, and it is a very important concept which one should remember, and this may be asked also because it is not frequently there in the exercise books, and so this portion is to be very much understood and remembered for your exams. I hope that you have watched the full video and have understood the concept very well. Please do like, subscribe and share this channel with your friends. Thank you so much for watching this video.